At first sight, Donald Trump's unexpected victory in the US presidential election raises many challenges for Asia, including a possible near-term hit to US and global confidence and growth and radical trade policies targeting China and other countries. We have already seen some of the implications today in falling Asian stock markets and a sharp strengthening of traditional safe haven assets such as gold and the Japanese yen. However, in office, Mr. Trump may prove less radical than his policy proposals suggest. Furthermore, if growth does suffer under Mr. Trump, then the Federal Reserve may only raise interest rates slowly over the next few years. This would be positive for Hong Kong property assets, since Hong Kong interest rates are effectively tied to US rates as a result of the currency peg. If growth does slow, the US dollar may also start to weaken after many years of strength. This would be negative for Asian exporting countries, and perhaps especially Japan. As it happens, property investment volumes have already fallen in Japan this year as the result of a weak economy and the strong yen. Direct medium-term implications for developing Asian economies are more limited. China and India are experiencing strong secular growth, which is unlikely to slow sharply for the next few years. Investors and large multinational occupiers should continue to be attracted to important commercial property markets like Shanghai, regardless of who is US president, while demand and supply in the Chinese and Indian residential markets are driven largely by domestic factors which have little to do with the US. Perhaps the most important implication of Mr. Trump's victory for Asia lies in the long term. In combination with this year's unexpected vote in the UK for Brexit, that is, departure from the European Union, the success of an anti-establishment candidate in the US presidential election should remind global investors and property occupiers of the potential for shocks in developed as well as emerging countries. Since the global financial crisis, US financial assets have been in high demand and the US dollar has been strong. This has been reflected in heavy capital outflows from Asian real estate and stagnating capital inflows over the past 8 years. The twin developed market shocks this year should mitigate political and economic concerns about Asia and lead to higher demand for Asian assets, including property, over time. We will publish an initial report on the implications for Asia of the US vote today and follow up with a detailed report next week addressing the economic implications for the major Asian investment property markets. Thank you.